Now, with two upswings in the 150s forming a more clear horizontal range, some may point to a minor double bottom pattern, in which case short-term indecision could continue for a few more days, and if the chart can keep closing over 182, conditions improve for something like a 3 methods rising candle pattern to form to initiate the breakout into the 190s. On the other hand, if the broader bearish context prevails again, price can accelerate down into the established horizontal range after closing under 182. So in the intraday, with this 15-minute chart, attention will be focused on whether there will be further development of this potential descending triangle pattern, which conveniently has the same 182 level marking the base. The conclusion to the triangle will likely take place in the 5 to 8 interval. In the case price breaks over the descending trend line to fail the pattern, pay attention to those fan lines and the 186 to 185 range. But at this current time, with price still well within the triangle, there's a short-term bearish advantage for dropping towards 182.